Salt to staples to Starbucks. Sunil D'Souza, Managing Director and Chief Executive of FMCG major Tata Consumer Products, is steering all this and a lot more. For this episode of the Morning Brief podcast, I caught up with Sunil to capture what India's burgeoning consumption landscape looks like when he expects India's cities to beat the protracted slowdown, unrelenting commodity costs, volatile global markets, and resurgent regional competitors. All this at a time when consumers may prioritize savings and debt reduction over spending amid rising prices. Sunil, who's been steering Tata Consumer since April 2000, has been instrumental in leading large acquisitions such as Ching's Secret, Fab India-backed Organic India, and millets-based cereal maker Soulful. Previously with Whirlpool and PepsiCo, he's just been reappointed as Chief of Tata Consumer for another 5 years. Finance Minister Nirmala Sitharaman's 1 lakh crore rupees stimulus to the middle class in the form of tax breaks has put the spotlight firmly on consumption. But will consumers take the bait? More importantly, will India's cities transform into growth hubs? Listen to Sunil D'Souza as he draws on his vast experience to throw light on all of the above. It's Friday, February 7th. I'm your host, Ratna Bhushan from the Economic Times, and you're listening to The Morning Brief. Good morning, Sunil. It's so nice to have you on the Morning Brief podcast.
Thanks, Ratna, for having me on the podcast, and it is always a pleasure to talk to you.
So, to start with, quick thoughts. Overall, your earnings are largely in line with expectations. Would you agree?
Yes, more or less in what we expected. See, right from the beginning of the quarter, we've guided very clearly saying there is going to be pressure on tea margins. And if you look at our results, 17% top line, EBITDA percentage was negative to 2.1%, but overall absolute numbers came in flat. Group net profit, of course, there is an impact of the difference in interest income versus the cash that we were carrying last year and the borrowing, which is going down steadily with the rights issue. So overall, not surprising. Across categories, the great news is that we've got India tea firing with a 7% volume. I think we will be ahead of industry here. Salt, despite the fact that we took price increases, we still grew volume, and the growth businesses, which we had said 30% of the portfolio came in at 27%. So overall, yes, the only issue on the horizon is the tea prices. As I have said, tea costs went up by about 25%, and roughly 10% of that has flown through in terms of price increases. So we mitigated about 40% of the increases. That leaves 60% still there. The brunt of the, I would say, pressure on margins was this quarter. Going forward, as the price increases get actualized in the market, and we see newer price increases, and with the new season coming mid Q1 onwards, hopefully if the crop is proper, prices will reset and therefore margins will go back to normal. I think that's a good place to be in. Overall, whether it's our growth businesses, our international coming back to shape, tea volume firing, including salt coming back, I think it's been a pretty good quarter.
So that's a good snapshot that you've given. So, we'll soon get into the new fiscal, like you also mentioned. So at a macro level, what would the demand outlook be for the next fiscal?
See, Ratna, I think we were one of the first to flag off saying that there is pressure on demand. I think we did that in early Q2. And that has now borne out across the segments. Now, just as a perspective, while I do hear rest of our peers talking about pressure on urban, from a TCPL side, if you take general trade, overall urban is low single digits, rural is double digits. And if I add back e-com and modern trade, which is again an urban phenomenon, then even urban is at double digits. So broadly, I would say the big impact which we had flagged off of inflation and specifically of food inflation, I think that is waning. If you look at the numbers, even from the releases, 11, 9, 8 in that order,
Right.
And that has been easing off, number one. Number two, I would think the government is now extremely conscious of the fact that the GDP growth needs to be driven. So you will start seeing infrastructure spends continuing. You will start, probably, I'm hopeful that consumption measures will get kicked off. So I remain hopeful of demand picking up from here on going forward.
A lot of companies have also called out that rural is growing faster, and you've also given some data on this. So in the next few quarters, or the Q1 Q2 of next financial year, do you see rural continuing to outpace urban, even though urban will grow?
I would say till at least another quarter or two, I would say rural will continue to outpace urban. That said, I remain hopeful that urban will come back. Urban is the big consumption opportunity, big
Right.
growth opportunity going into next fiscal. And I'm quite confident that it will come back.
And even in urban demand, is it the lower end of the urban demand which is facing stress because there is premiumization, which has also kicked in, like, we all know. So which segment of the urban category is under maximum stress?
So I know I've been reading comments from some of our peer companies about stress on the lower end, etc. But from our perspective, Ratna, when we look at our portfolio, overall, I think we are seeing decent growth now across the portfolio. If I rewind back about 3 months back, there was stress on the middle to higher end. Then the lower end, especially in tea, was starting to fire up very strongly. Now, as we've gone through, and even for the month of January, we see all sides of the portfolio firing equally well. So, I mean, longer term, there is an opportunity in India both for per capita consumption, movement from unbranded to branded, as well as premiumization. I think broadly, you will start to see all the pieces starting to fit in as we go ahead.
This brings me to my next question on Starbucks. So there was a lot of chatter last quarter on, recalibration of stores and a rethink on Tata Starbucks. I'd like you to throw some light on this.
So Ratna, in the middle of last quarter, I think there was a social media article which went viral, which said that Starbucks is reconsidering its business in India, and we issued a stock exchange notification to debunk the whole piece. Now, just
Right.
between Tata Consumer and Starbucks, we are very, very committed to the India opportunity. We've said we will go for 1,000 stores by FY28. In the longer term, we remain focused on that. In the shorter term, we opened 16 stores last quarter, primarily in Eastern India and 4 cities. And now we are in 74 cities, 473 stores, largest coffee operator. We are focused on driving traffic back into the stores, which was a bit of a pressure point. And like I said, I think we are seeing improving same store sales growth. Improving, we're still not out of the woods yet, but the trajectory has been better from where it was last quarter. And we will have the short term blips. So we've got to
Okay.
brace for that ups and downs, and we are across all businesses. And we will continue to do the right things, whether it is in terms of focusing on efficiency in cost of goods, focusing on capex efficiency, focusing on driving new stores, marketing, driving traffic into the stores, new product. We will continue to be focused on growing the Starbucks business.
So there's a mushrooming of cafes, hyper local cafes, or cafes in, you know, maybe they only in 2 or 3 cities. So there's a lot of competition in this space. I'd like your views on this. How does Starbucks deal with all these mushrooming of smaller cafes all over?
So Ratna, let me put it this way. Overall, coffee as a category is underpenetrated in India, whether it is out of home or in home. And globally, coffee is trending, coffee consumption is trending. And India, therefore, both out of home and in home will continue to grow. We are focused with our Tata Coffee Grand portfolio on the in home consumption. On the out of home, Starbucks is our vehicle to capture that opportunity. I mean, it's not that we are the only people who are seeing that opportunity. There are enough players out there. India is severely underpenetrated in a number of stores. If you benchmark, just forget the total cafes, even the Starbucks number of stores in the Philippines or it's China or Indonesia, we are severely underpenetrated, and therefore there is an opportunity and we'll keep opening. But overall, coffee shops too are underpenetrated in India, and therefore you will see competition pop up. There will be unorganized competition pop up. There will be, we call them indies, the independents pop up. There'll be the small 2, 3 outlet chains which will pop up. So that's not something which we can control. What we can definitely focus on is making sure Starbucks is there as a great brand. A, B, the consumer experience in Starbucks is great from a product perspective. And we're making sure we're creating a destination to pull in consumers into the stores.
So, Trump had announced tariffs on coffee and then he rolled it back. But it did send jitters, in the coffee sort of landscape because prices have anyway, over the roof. So, what are your views on this? Do you expect that, this chatter about tariffs on coffee would further impact coffee prices in India as well?
So Ratna, again, I would never try to second guess someone else's prerogative. But here's the thing, coffee prices are probably at a 50-year high, if I'm not mistaken. A Robusta trading at roughly 5,400. Arabica now hitting 350. So they're at an all-time high already. And I would say even these levels and slightly higher, we will start to see impact on demand. So I would be more bothered about that rather than trying to second guess what is happening. So even in the US, for example, we remain focused on making sure that we are adapting our portfolio and our execution. US actually turned around and we saw 5% growth in this quarter. India, we delivered a 28% growth in coffee. India, I think we've got a long, long way to go on coffee because compared to tea, it's a significantly smaller market, but it's trending and it's growing far faster. I think we will make sure that we participate in the growth.
Are you looking at more acquisitions? You did some great acquisitions last year. If yes, which are the categories you're looking at?
We've covered a fair ground in the past 5 years, both organically and inorganically, covering up the categories that we wanted to play in, including doing inorganic acquisitions, including Soulful, including Smart Foods, including Capital Foods, and including Organic India. Right now, in the shorter term, while we remain focused on delivering the business cases and therefore the value out of Capital Foods and Organic India, we will continue to grow organically and inorganically in the future. Now, I can't put a target number or a target time to opportunities because I'm of the firm belief that inorganic, you should never put a target because then you might chase, I would say, opportunities which don't create value. So if something comes along, we will definitely look at it. But in the short term, we remain firmly focused on making sure we deliver Capital Foods and Organic India.
Absolutely. But you said that obviously the vision is to be a FMCG, holistic FMCG company. So that's why I wanted to know if personal care is something which is on the horizon for you.
So Ratna, full FMCG includes the whole portfolio. I cannot put out a time or a specific category at which we will move from beyond F&B. But I would say 80% of the opportunity in the FMCG space is in the food and beverage space. And I think we've got still space to run here. We've got a very strong DNA of food and beverage, and we can create value here. So while we remain focused on F&B in the shorter term, in the longer term, yes, we will consider beyond F&B. And as long as we can create value in food and beverage, we'll continue to remain focused here. The day we see that, it is starting to become diminishing returns, we will start to pivot.
I was reading your earnings statement. Quick commerce has grown really fast. E-commerce is growing really well. What is your projection for? Do you expect this momentum to continue?
So, yes. Ratna, you're absolutely right. E-commerce grew by 59% for us and is today 15% of my portfolio. Half of that is quick commerce. Almost, was negligible 24 months back. E-commerce is larger than modern trade for us, which is a significant milestone. Now, I wouldn't try to forecast where it's going because while I know its convenience, it is probably a little bit of availability, price, all that for the consumer. I will make sure that my system is geared to take advantage of the consumer wherever they are. I will move across channels. I will make sure we create marketing specific channels as well as tailor our products for the specific channels.
Important points there. And obviously, from what I gather, there are specific brands being launched only for e-commerce and quick commerce and different channels, right?
Yeah, absolutely. A lot of my newer brands, for example, e-commerce gives me a fantastic incubation ground. We launched dry fruits only online, proved the business model, and now we've taken it offline. Similarly, cold press oils. Incidentally, dry fruits is now hitting 100 crore ARR, which in any startup concept is a decent number to hit. Cold press oils, which again we launched only online maybe about 15, 18 months back, is now 70 crores ARR, and that also we will take it to offline channels. So e-commerce gives us the ability to target a customer size of one, to create a product which appeals to a very specific target segment, to play in very niche but premium channels, and test out concept before scaling them.
Absolutely. So, Sunil, there are divergent demand trends which we all know, which have been panned out in the past 1 or 2 years. Premium segments growing, down trading in the mass segments. So, is that a new normal for India?
So I wouldn't say it's a new normal, because if you look at across categories, Ratna, there is opportunity both on penetration as well as premiumization. So you will see growth happening at the lower end of the portfolio. For example, in tea, from unbranded to branded, you will see movements from salt, from what I call no-name brands into name brands. But you'll also see people moving from regular salt onto rock salt, onto black salt. We've just launched salt with iron. We're launching salt with zinc, which provides immunity. You've got to play the game from both sides. You have to play the penetration opportunity for the scale that it offers, and you got to play the premium opportunity for the margin opportunity.
Last couple of months and even yesterday, one of your peers mentioned that, with the volatility in the market, the strategic timelines for the plans are getting shorter. Companies would plan like 4, 5 years. The vision statements are getting shorter, 3 years, 2 years. So I'd like your views on this.
So let me put it this way. Strategy is not something in my mind which you write for 3 or 5 years and then visit it again in 3 or 5 years. Strategy is a rolling document, because as things change, as long as they're within a certain defined frame and the parameters move within that defined frame, you stay true to your strategy. But if you start seeing dramatic shifts in the market, for example, in the last 12 months, quick commerce came out of nowhere. So would I sit on a strategy document which I wrote 24 months back and not move till I write the next strategy document? Absolutely not. We've got a board which is very, very agile, board which is very supportive, and a board which also gives gentle nudges to the management team to make sure that we are always on point, if I may call it. So if there are trends which are moving, we do a strategy exercise on a yearly basis. We keep rolling for every 3 years. And then we do a operating plan on a yearly basis. And then, of course, there are the periodic board meets as well. So it's not that it is fixed time frame saying we will only review it X years, 5 years. It is a rolling document, ideally on a yearly basis. But if there are moments within the year, there's no reason I would not do a pivot.
From sluggish demand to tax reliefs, from quick commerce to the urban-rural divide. Some are of the view that lingering food and fuel inflation could continue to temper the FMCG basket. Others are more optimistic. The next few quarters will decide the fate of India's consumer markets, and the jury is still out on whether Indian consumers will buy more discretionary goods or more staples. We'll be back for more on that. But for now, we're signing off. You've been listening to The Morning Brief, and I'm your host, Ratna Bhushan. This episode was produced by Vinay Joshi, sound editor Rajas Nayak, executive producer Anirban Chaudhary. The Morning Brief drops every Tuesday, Thursday, and Friday. Do tune in to ET Play for all audio content, including The Morning Brief. You can listen to our podcast on all major podcast streaming platforms. Thank you for listening and have a nice day ahead.